Hi traders, it's Roberto, and this is the tutorial for the Heiken Ashi 4-hour chart strategy that I've been backtesting for many years, and so I thought I'd share it. So let me get started. Two things need to happen before you can take a trade. One is the two lines of MACD, and I use the default settings on MACD. Two lines of MACD need to cross to the downside. So that means that when a 4-hour candle closes, then that would confirm the two lines of MACD. And until the candle closes, the two lines of MACD can weave in and out. But as soon as that candle closes, then it's confirmed. Now, two things. Either you can take a trade when the Heiken Ashi candle turns red and the two lines on MACD cross to the downside. That is definitely a sell signal. The other trade strategy is, of course, if you're not at your computer when you see this, if you see a trend line break and the two lines of MACD are crossing or have crossed, then that is a very high probability trade setup. And you can see on this chart, price went all the way down to here, 350 pips. This is a 4-hour chart, 4-hour strategies. Now this candle looks very different on regular candlestick patterns. It's actually a bearish engulfing candle. So if you're not familiar with candlestick patterns and you prefer using Heiken Ashi, this strategy worked well for you. You could use it also for the third touch. We went over the strategy when you connect swing points, and these two swing points, and there's a swing point there, and then notice that a bullish candle appears, and also the two lines of MACD crossing to the upside. So you would be looking to buy right at these levels down here. Okay. And you would stay in this trade until the 4-hour Heiken Ashi candle changes color, and then here it turned red. Okay. Then you have another trade setup where you two lines of MACD crossing to the downside, and then you have a red Heiken Ashi candle, which is a sell signal, and then you would be entering a sell here. Now it's very important that you go back in history and practice this over and over so you become familiar with the strategy. Otherwise, if you don't practice and you attempt to do this for the first time, you'll be too afraid to take the trade because you're not familiar, you haven't seen it 1,000 times like I have, and you won't react. So what you need to do is just go back in history, and here's a great example where the two lines of MACD are crossed to the upside on Heiken Ashi, or on MACD, and then a bullish Heiken Ashi candle appears. And these are 4-hour candles. This is 4, 8, 12, 16 hours of the market in an uptrend, putting 139 pips before it gave us a bearish Heiken Ashi candle. Okay. So again, go back in history. Look for the crossover on MACD and wait for red candles to come in. Here, the market did not go down that much, and you would have probably have to exit this trade because you have blue candles coming in. Okay. And it is why I'd like using trendline breaks as entries, because that confirms. This is a great example of a great trendline break when we have two lines of MACD cross to the downside. And this is the strategy that we use on the regular candlestick patterns, essentially connecting the swing points, waiting for a candle to close below the trend line, and also confirming that with the two lines of MACD crossing to the downside. So basically, this run to the upside is over. The bears are in control, and look at this run all the way down to here. So this is a good strategy to use if you prefer using Heiken Ashi candles. Okay, just make sure that when you see a color change on Heiken Ashi on a 4-hour chart, that the two lines cross, because that's your confirmation that this is most likely the end of the run and we're going to be going in an uptrend. You can also throw in some trend lines and take the trade after the market breaks above the trend line. Okay. So that's it. Again, send me any emails, any comments to my, just go to the website. There's a contact page if you have any questions. So thanks for watching the video. We have news events coming up in about 29 minutes on the Canadian dollar, Canadians jobs report. So we're going to be trading the CAD yen and the pound CAD and the USD CAD. So now if the numbers are extreme, I would suggest just getting in the markets. You don't even have to wait. If the number is extremely negative or extremely positive, then you would definitely want to be taking the trade. You don't even have to wait. Normally I would wait 5 minutes, the initial reaction, and then wait for retracement. But if the numbers are very extreme, if we have really bad numbers, of really stellar numbers out of Canada, there's going to be plenty of time to make money on that trade. Okay, have a good weekend. Thanks for watching, guys.